Welcome back. You're watching a continuing coverage here from Davos 2023. I'm Shereen Bhan. There's a virtual snowstorm outside, and so we've had to shift indoors for a little bit. Rishi, thanks very much for joining me here on our coverage here from Davos 2023. It's a pleasure having you. And for the benefit of our viewers, Investcorp has assets under management of what? Over 50 billion dollars now? Okay, over $50 billion. Let's talk about what the global climate looks like and what that's going to mean for the year ahead.
So I think, coming into 2023, of course, the two dominant themes were A, runaway inflation, and B, I think all around geopolitical security. And that security spilled over into a broader theme around supply chain security, energy, food, resilience in the supply chains, China plus one kind of theme. Getting into 2023, it seems like that security is going to be an important word, right? The supply chain resilience and security. On the inflation side, though, it seems like the central banks, through concerted action over the course of most of 2022, seem to have gotten a better grip on inflation that was at risk of getting away from us. And that ought to lead to much more constructive markets, probably in the second half of 2023.
Well, that's the hope at this point in time. But in terms of the view on India, and I know that you've been bullish on India, Investcorp is invested across 13 or more companies in India, a plethora of sectors from healthcare to consumer tech. What's looking good to you at this point in time?
So, look, let's start off by recapping. We are not even 4 years old in India. We are 40 years old as an organization with 50 billion, as you referenced, in total AUM. In India, our journey is less than 4 years old. But, importantly, over the course of less than 4 years, we've made 17 investments in India. It's been the most active market for us in the last 4 years. Not surprising, right, given the opportunity set that we see in India, primarily around some of the sectors that you already referenced. But a broad theme that is all about the middle market company serving the middle market consumer, right? With goods and services priced at an affordable price point. So healthcare is a very important sector for us, and you've seen us very active in that. Clove Dental is our most recent deal that we announced. Before that, NephroPlus, ASG eye clinics, and so on. We insure pharma as well. Financial services, another very important sector for us, particularly financial services inclusion. Consumer tech, you talked about that. Very, very high growth sector for us. Fresh to Home is one of our assets over there that everyone is familiar with, hopefully, and buying from. And logistics, NDR, Express Bees, these are all our portfolio companies. We've been pursuing those 6 sectors beyond the 4 that I mentioned, plus IT services as well. Quite in a very disciplined manner. We see a lot of potential. Our AUM in India is already getting close to $1 billion in aggregate. But more importantly, given the size of the opportunity set that we see and the size of the overall market, this ought to be a $5 billion business in the medium term.
So what is the medium term? When can
in the
we
next
expect
5
you to
years.
hit that?
In the next 5 years, Shereen. I mean,
So $5 billion in the next 5 years.
Yeah, if not sooner. The opportunity set is certainly there.
And the same sectors, or are you looking beyond this?
Those 6, for sure. The one more that I'd add to that list is infrastructure, social infrastructure in particular, schools. We've been investing around schools. One of our portfolio companies is Zolo Stays, which provides urban accommodation to migrating workers. So that's softer infrastructure, not necessarily the hard, power generation, etc., but the softer element of social infrastructure is an area that we think offers a lot of potential.
You talked about what's exciting in India, but also from a returns perspective now that you are putting your money to work in India, what's the expectation? What's the timeline that you're working with?
So obviously an emerging market or a developing market like India tends to offer a premium over developed markets, right? Historically, our traditional base of investment activity was US and Europe, where we've been investing in for four decades. So you do get to capture a bit of a premium. But as India grows and as the world becomes a quad-polar world, with US, Europe, China, and India being the 4 poles, naturally there's going to be some element of shrinkage in that premium that investors expect and demand from India. Is that a good thing? In the long run, a lower cost of capital for the country is a good thing. But we have to get much more disciplined in the interim to make sure that we are taking risk commensurate with the associated return that we can expect to earn from our investment activity in India going forward. So far, Again, 4 years is not a lifetime, but it's long enough for us to know and get a very strong sense that we are actually getting and exceeding the returns that we had hoped to generate and earn and deliver to our investors from India.
Let's talk about some of the global challenges that we started by addressing as well, and what that's going to mean as far as the kind of investments that you're expected to make outside of India. What does that look like?
I think it's going to go all the way back to a very similar approach as the one that I outlined for India, which is we tend to identify super secular trends. In fact, when I say we tend to identify, we actually work very closely with our investors to figure out what is top of mind for them, not for the next 3 months or 3 years, for the next 30 years. What they believe is likely to shape the global economic landscape over the next several decades.
So what are the mega trends that you're working on?
So the mega trends that we've identified coming out of that process are digitization and AI. So that's a very big area of focus for us. Healthcare, energy transition, right? So these 3 areas are areas that we are likely to double down on, but that's in a very super secular sense, right? In the interim, in a very tactical manner, over the course of the next year or so, as we see a softer economy, particularly in the developed markets, and as a consequence probably in the developing markets as well, we are likely to double down on slightly less cyclical sectors, safer sectors that benefit from a likely longer, higher for longer interest rate environment. For instance, in credit, floating rate loans, in real estate assets that tend to reprice on rent, in tandem with the market so that it's inflation protected. And in private equity, businesses that are serving other, B2B kind of businesses rather than B2C businesses, because there's likely to be some softening of consumer sentiment as the economic growth compresses a little bit, particularly in developed markets. That's a very tactical view. In the long run, in private markets, we tend to take a 3 to 5 to 10 year view, right? And there the super secular trends around healthcare, energy transition, digitization, and artificial intelligence is something that we have been investing behind and will continue to invest behind.
Well, we look forward to seeing and hearing more from you, not just about what you're doing and how you're deploying your money globally, but more importantly, what you're doing in India. Rishi, always a pleasure. Thanks very much for joining us, and we wish you the very best of luck.
It's a pleasure being here with the snow flurry behind us.
With the snow flurry behind us. Appreciate you joining us.
Thank you for having
me. We are
me.
going to take a break and continue our coverage here from Davos. Don't go anywhere. We're back in a minute with more.